Hi, this is Mac with PriceActionTradingSystem.com, and this will serve as a chart lesson for Tuesday, May the 15th. Um, the month's half gone, so hopefully you're having a good month. But let's get right to it so I don't waste any time today. I'm trying to cut the time on these things down, and as hard as it's been, I'm going to keep working on it, and hopefully we'll get there eventually. But we really had a trading range today. Um, you could have had Probably should have drawn this on there. You could have had this line right here as well, but really um, we were in a trading range, and these lows across here are nothing more than the lows from, as you can see, from yesterday, and and it was fairly easy if you just used those closes, or even if you used those closes right there, it still got you where you need to be, and that's probably more likely right there. Those closes right across there from the moves yesterday, and but that was pretty much the lows, and the highs were really uh, we had a breakout out of this trading. This is just a trading range right here, and we broke out. And this rally back off these lows is just a retest of this breakout. As you notice, when prices broke through there, they never came back and retested it. And it's rare that prices don't come back and retest it. So that's a good clue of not to be going low down here at this strong support, because as soon as we find support, we're probably going to come back and test that area. And that's exactly what we did, because we broke through here and didn't test it. We came back and tested it here in the early morning, tried to go lower. We tested these lows again, and once again they held. And you can see they held across there. And then it was off to go test the high again. We went and tested the high again. We broke through, it failed, then down, and then we're coming back down to test the lows again. And this time we got through. And generally, if you are going to get through, it's going to be after a failed break higher like this that traps a lot of longs. And and so it really is just a trading range day. Even though we did break lower late in the afternoon, it was really too late to be looking at any of this down here. If you caught this early, that's great. You could have ridden it down. But there weren't any real good longs in here, and it was too dangerous to go short, because look how far we've already moved, and how long we've been away from um, the EMA. There was a second entry short right here after the new low that worked pretty good, but it's really late in the day, and I don't recommend it. But let's talk about the trades back up here. The first there was a short right here because the trend had been down. There was a failed second entry long right here that right at the open, right after the open, and so that's generally a very good time that you'll see a trap. And so if you caught this failed second entry long, it was okay to go short right there, and it was a little more risky going short right there, and you can see it hesitated a minute on that bar. But this is a big prices moved up here but closed all the way on the low, and even though that's got a little green tiny body, that's a bearish type bar. And so going short below it was okay, especially with the trap. And you had a new high here, so the count is 0. You pulled back and you broke higher. Right there is your first entry. Pulled back, we broke higher again. Right there is your second entry, and they both failed. So going short right there, you know there's probably some trap longs. And I was really thinking that we might have another leg equal to this one, but you can see that didn't happen. And we bounced right here, and this was close enough to these lows. By this time you probably should have had your line up here like so, and because there's your last closes, and at the very least you should have had it right here. And but you probably had it right here, or maybe even right here. And this is just a failed break below either of those swings, and that set our trend line. And the real reason this was a good entry is this is a second entry long, and let me just show you. Here's your first leg right there, then you got a little two-legged correction in the middle, and then there's your second leg, and it really overshot your second leg. If you use the closes, it's a lot closer. But that's just a two-legged pullback that retested this breakout area right here. So this is a double bottom for the most part. And that's another reason to go long. I love these kind of setups when you can easily find the two legs back to a strong support or back to a strong resistance. That's generally a good place to enter the market. And you can see how that rocketed up because it just caught everybody off guard thinking we were going down again. So that was a great entry. And so then you should have had your trend line in place, and these are both just pullbacks to the trend line on an uptrending market. And you can see there's a reversal type bar on both of them. You had one here, you had one here, and this is a second entry long. Here you got a new high here, one leg back, move up, second leg back, so that's a second entry long right there. And that was another nice move up to these highs. And then you went into this little trading range right here, and this kind of felt like a counter trend trade, but if you saw this, it was a good trade because we were in this trading range. Prices failed out the bottom, tried to go higher. A lot of people thought the shorts were trapped, but look how far away we are from this trend line. Look how we're way away from the EMA. We didn't get back to the EMA, and the best trades always set up off the EMA or the trend line. And so this was a good short right here because it's a failed break out of here, and it was only good for a scalp because they did come back and try it again, and they basically just tested those highs again and turned down. So you could have actually gone short here because this is a repeat pattern of this trade right here. And there's also, let me show you this. Here's leg one right here, then there's a two-legged correction, and then look, there's leg two, almost a perfect measured move. And so that was your other reason to be thinking staying with us till we got a measured leg and then going short. And again, this is just a pullback to retest these breakout areas from where we broke out without coming back and testing it. And there really weren't any other. It was really risky going short right in here. I mean, this is a breakout pullback short right here, but I don't like it, and I didn't mark it because generally you're going to get a retest of the high, and but sometimes on a short-term trend you just get a retest of the trend line like right here, and then prices turn down. But your better setups are going to give you a retest of the high, and for that reason I didn't mark this. But if you took this, it was a good short. Prices were making lower lows and lower highs, so it does meet our rules, but I just didn't like it. And even if you drew a trend line across here, you can see we never came back to that trend line, so it just wasn't a good short. I just didn't like it, so I didn't mark it. And if you took it though, it was okay. And there's actually two entries down here. You've got this double bottom across here. This is another failed break lower. Entry above this bullish bar is a good entry. And if you didn't take that one, if you notice, there's two legs back to the EMA, and these rarely fail, but the thing you got to look at is this set up so close to this strong support, which was also strong support from yesterday all the way across. You don't want to be going too short where you don't have room to scalp out on that. And even if you move this down here, it looks like there's enough room, but it still was a fairly risky trade because that was your strong support area, and you can see it kind of held all day long. And so I didn't like this short, and it turned out to be a trap. If you did get trapped, you wanted to exit right here and maybe in reverse. And if you caught either one of these entries, this was the better entry, the safer one. As long as you kept your stop below the signal bar. And what I actually did was enter down here above this doji, which was the better place to enter. And even my runners survived on this one after I scalped out. If you didn't enter till here, which was the better move, because you want to wait on a bar that's, since we're going long, we want to wait on a bullish bar. The better entry was right here, or the safer entry, and you wouldn't have scalped out, and it would have been a little scary. But if you had, as long as you kept your stop down here, you were okay, and you could see it was easy to get to the high. And again, on our stops, the most we ever want to use is 2 points. If you got to go with more than 2 points, you either need to skip the trade, or realize that you may not have enough room for the trade to work in your favor. So keep that in mind. Don't go with more than a 2-point stop using this strategy, because if you do, you're going to end up losing money. But there was another entry right here. I didn't mark this one because this is a really strong move coming here after another failed break lower. So there was a good chance we were going higher. And if you went higher on this second entry, it worked. It was good for a scalp. But again, it wasn't a good setup because we didn't get back to the EMA. And you probably should have had your trend line drawn right in here too. And you see how far away from that trend line we are. So this is actually a good short if you took it. And there was another short right here because now we've got another repeat pattern. Remember the failed second entry long here, the failed second entry long. Where was the other one? I guess it was right. Oh, it was right here. The one I didn't mark. That's why I didn't see that one. These failed second entries this is just a repeat pattern, and here it is again. You pulled back, there's your first entry, you pulled back again, there's your second entry. So it's just another repeat pattern, but even better, it's a failed break above these highs here. And so going short right there was good too. And your runners would have been good on this, and you could have ridden this all the way down to the low, where lo and behold we bounced once again. And it was really obvious this was a trading range here by this time. If you're drawing your lines, you should have found this. And so this was a great long here, and then there was a second entry long here. But this one was a little more risky because we got a lot of overlapping bars, and you got all these highs right here. It was okay if you took this one because I believe it was a good trade coming off this low. I didn't like it. I didn't mark it because this was the better entry right here. This was a good setup. Hopefully you saw this. This is a perfect bounce off the same place we've been bouncing. And that just kind of confirmed it. That really confirmed this trading range. But hopefully you did draw your trend line here, and you should have been drawing all these trend lines. And that would have helped you find this trade. And this one was iffy, but because it was a pullback, a two-legged pullback to the EMA, and because we had this little failed break higher, and we tested that trend line twice, you can see it wasn't real clear that this was the trend line. It looked like it was, but we tested it once, pulled back, tested it again, and then turned lower. So going short right there was a pretty good trade, with thinking that we got enough room to come back down here. And I wasn't trading at this point, so but if you drew your trend line, you should have seen that. And it is risky because we had just come off these lows, and the odds were high that we may be going back up here. But you can see what happened. We continued lower, and entering here, you're just looking for a scalp, but you keep your runner just in case, and you see what happened. There's even a breakout pullback short here, but I don't like that trade either because you still had your lowest lows right there. And so that's not a real good breakout pullback short. And it's kind of like the breakthrough from up here. Prices just kind of kept going, and so now they're trying to come back and retest this area up here because you almost always get a pullback to retest. So that was pretty much it for the day. It was kind of a tough trading day. I got a couple of emails from people saying they really didn't do well today. And if you didn't notice that it was a trading range and you didn't know where the lows and highs were, I would agree that, yeah, it was a little difficult today. And even the trends that were going back and forth were choppy. Look how choppy that is. And it's easy to get chopped up in this stuff. So if you don't see a trend line or a support or resistance to trade off of, just don't trade. That's the best advice I can give you. If you force an entry and when you're not sure, I can tell you what's going to happen. 90% of the time you're going to lose your money. You're better off not to trade. You know, if you don't throw your money out there, if you don't roll the dice, you can't lose. So if you're not sure, if you're, you know, some days you just get out of sync with the price action, and it's harder on some days than others. And I can see where this would be a difficult day for somebody that doesn't spot the right areas. So if you're not in sync with the price action, just do not trade. That's the best thing I can tell you. The market's going to be back tomorrow, and I can remember how it was back when I first started trading. You felt like you had to make money every day or you had to trade every day or you were doing something wrong. But that's not the case. I can assure you that you're better off to stay out of the market than to enter on a whim or a guess when you're out of sync with what's going on that chart. There'll be some days where you'll be in sync and it will be effortless and everything you do will be right. But there will be those days, and I know a couple of y'all had them yesterday. I've got some emails yesterday. I only got a couple today, but even yesterday I had some people send me emails saying, hey, I just couldn't get anything right. And you will have some days where the market, you're just out of sync with it, and you're better off just to either get up and walk away, go take a break, go get you a snack, get you something to drink, and then come back, or even better yet, just close up shop for the day, go do something, get it off your mind, come back and look at it again later, and it'll be real. It's usually real clear where you made your mistake, and then just start over the next day. And I promise you, don't, protect your capital. That's what you need to be doing. And if you're having a bad day, you're just donating your capital to somebody else that is having a good day. So keep that in mind. I'm gonna wrap it up. We'll see you tomorrow. This is Mac with PriceActionTradingSystem.com.